In the pharmaceutical arms race, one company has essentially found the ultimate lever. We're looking at a landscape right now where the fundamental definitions of medical intervention are being completely rewritten. In today's explainer, we're stripping away the retail noise to evaluate the hard data behind Novo Nordisk. Because let's be clear, this is no longer just a diabetes specialist operating in a crowded sector. They fundamentally alter the mechanics of metabolic healthcare.
They are quite literally the architect of the obesity revolution. Okay, let's dive into this. We're going to conduct a cold, clinical breakdown of how Novo Nordisk is attempting to lock down arguably the highest conviction therapeutic market of the 21st century. Our objective today is to figure out whether the underlying math and structural pipeline actually support the broader market's grand narrative, or if we're all just ignoring some massive systemic risks.
Here is the systematic dossier we're running through. First, the obesity market architect. Second, our catalyst, the oral transition. Third, the technicals, cooling and resetting. Fourth, the 200-day trend wall. Fifth, the Lilly risk factor. And finally, our verdict, overweight accumulation. We're taking retail sentiment entirely out of the equation here, focusing strictly on the architecture of the trade.
Starting with Section 1, the obesity market architect and their fundamental dominance. Let's look at the metrics that define Novo Nordisk's highly efficient market engine.
71.4%. That is Novo Nordisk's return on equity. To put that into perspective for you, in the realm of large-cap pharmaceuticals, generating an ROE of over 71%, backed by an operating margin of 61.6%, is an indicator of absolute operational dominance. It shows superior management of shareholder capital and massive, deeply entrenched pricing power. What we're looking at here is the financial engine of a monopoly.
And this brilliantly illustrates the current valuation opportunity. A price-to-earnings ratio of just 10.29. Think about that. We are evaluating a high-growth titan generating over $102 billion in net income, but it's currently priced like a deep-value stock. When you pair that with a 4% dividend yield, the fundamental floor on this asset is exceptionally well fortified against broader market downturns.
Moving to Section 2, the catalyst, the oral transition. You see, fundamentals only quantify where the company has historically been. We need to shift our focus to the primary structural driver, the clinical breakthrough designed to secure their future economic moat.
This oral transition is an absolute structural paradigm shift. Clinical data out of the European Congress on Obesity for the OASIS 4 trial confirms both the effectiveness and the tolerability of a 25 mg oral Wegovy pill. Moving from subcutaneous injectables to a simple daily pill drastically lowers the barrier to entry for patients, and it completely simplifies their complex global supply chains. It's the exact mechanism they need to turn this from a specialized treatment into an indispensable daily routine.
So the crucial point is watching how management is financing this revolution. They recently canceled a $1.33 billion rare disease factory project in Odense, strategically opting to just convert the site into a warehouse. And make no mistake, this isn't standard corporate cut-cutting. This is ruthless, surgical capital reallocation. They're actively pivoting away from secondary therapeutic areas to double down entirely on scaling that GLP-1 infrastructure. They have to meet unprecedented global demand.
Section 3, technicals, cooling and resetting. Let's pivot from the fundamental analysis over to the cold reality of the technical charts and see how this macro thesis actually translates into current market structure.
Evaluating our technical dossier as of mid-May 2026, the asset price is sitting at $44.74. The MACD, the moving average convergence divergence, is at 1.89, resting just above its signal line. This specific technical posture tells us that the broader bullish momentum is intact on a macro level, but the gap is rapidly narrowing. The upward velocity is definitively slowing down.
Now, what's really interesting here is the relative strength index. It's cooled off from an extended overbought level of 77.88 down to 59.92. Sentiment trackers are showing a lot of retail frustration as the stock pulls back right now. But technically speaking, this is a highly necessary, healthy reset. The underlying asset is just systematically shaking out those over-leveraged retail positions and consolidating before its next structural move.
Section 4, the 200-day trend wall. This ongoing consolidation phase brings us to a critical threshold. Every major asset class relies on a baseline metric to separate a temporary dip from a full-blown structural breakdown. For Novo Nordisk, that metric is the long-term trend wall. $47.61. That's the 200-day simple moving average. It stands as the definitive blood-red benchmark for the stock's long-term bullish architecture. And the stark reality of the current chart is this. The active trading price of 44.74 is sitting straight below that wall. Breaking below the 200-day moving average officially fractures the long-term bullish technical structure. So while the fundamental metrics are screaming deep value, the price action is objectively signaling a severe technical breakdown.
Section 5. The Lilly Risk Factor. Obviously, this technical breakdown isn't happening in a vacuum. We have to acknowledge the existential threats to Novo's defensive moat, entirely without emotion, focusing strictly on the competitive and macroeconomic headwinds driving this specific price action.
The shadow of Eli Lilly is pervasive across this entire sector. Novo Nordisk is currently absorbing a massive capital expenditure cycle. It's expanded their debt profile to $130 billion and triggered a severe 58% drop in free cash flow. On the flip side, Eli Lilly is experiencing rapid, aggressive market acceleration. Lilly's Mounjaro just posted 125% revenue growth, and their clinical pipeline is a direct threat to Novo's market share. With Novo's current ratio sitting at a tight 0.788, they are highly leveraged in a hyper-competitive clinical arms race.
Furthermore, we have to plug the broader macro environment into our models. Rising geopolitical tensions in the Middle East are driving sustained volatility in energy and precious metals. We're tracking trickle-down inflationary pressure hitting retail sectors, which strongly signals a shaky consumer base. Look, GLP-1s are undeniably revolutionary, but they are still expensive, discretionary, out-of-pocket treatments. In a volatile, inflation-heavy environment, these therapeutics could hit a strict affordability ceiling much faster than the bullish market consensus thinks.
Bringing us to Section 6, our final verdict, overweight accumulation. We've weighed the fundamental dominance of the oral Wegovy transition against the severe liquidity contraction and the immediate technical breakdown. Let's synthesize this raw intelligence into a calculated action plan.
The institutional verdict is overweight. The underlying strategy here is structured accumulation. Step 1. Maintain a core position to capture the long-term expansion of the obesity market. Remember, this is demonstrably not a zero-sum game between Novo and Lilly. Step 2. Because the technical structure is currently fractured below the 200-day moving average, you absolutely must avoid aggressive, all-in capital deployments at current levels. Step 3. Execute a surgical approach. Gradually increase your exposure strictly through staggered algorithmic buy orders.
The primary target zone to safely accumulate and optimize your cost basis is exactly $39.55. This level represents the 50-day simple moving average. It's the precise calculated threshold where the corporation's fundamental value proposition perfectly aligns with an established medium-term technical support structure.
The transition from a speculative biotech narrative to a hard, logistical reality is actively underway. As Novo deploys billions into global manufacturing to defend their moat against Lilly, the core thesis still has to be proven. Will their aggressive oral infrastructure build-out secure their ultimate GLP-1 monopoly, or have they leveraged their balance sheet on a fundamental peak they've already passed? Keep your eyes strictly on the data. Precision. Data. Intelligence. This is Vanguard Neural.